And I thought, this is an interesting special situation. You should maybe take 25 basis points or something and buy it. It looks to be uncorrelated to other assets. It looks like it's going to be something big. I got hate like you would not believe. I mean, people said, "You're an idiot."
Hey guys, welcome back to Everyday Finance. In this video, Yusko discusses Bitcoin and crypto. Yusko claims that Saudi equities are far more contentious than Bitcoin at the moment, but no one hates him for Bitcoin. To be fair though, the price of Bitcoin used to be $500. By September, it had dropped to $186. Yusko responded, "They were accurate." Yusko worked for 8 weeks, and after receiving $1,000, he thought, "No, there's something here." He continued working for a little while more, and that's when he truly went down the rabbit hole and realized that this was an operating system. An operating system is blockchain technology. And lots of things Yusko discusses, so please watch the video to end, and share this video, and subscribe our channel Everyday Finance. Thanks.
I'm shutting down the fund. I'm going to spend the rest of my career on blockchain and Bitcoin. And look, I was not running drugs on Silk Road, not a technology student, not a cryptography student. I didn't really know what Bitcoin was. I'd heard about it, but I didn't really run in those circles. But as soon as he said blockchain is the infrastructure for the digital age, it's essentially an operating system for the next generation of computing, yeah, I get that. So I invested in that, and that did really well. I should have put the money in Bitcoin, but it didn't. And I did a little bit of work, Darren. I was skeptical, right? I was one of those people who was like, yeah, it's just, some Beanie Baby thing. But I did a little work. And after a little bit of work, first quarter 14, so about a year later, I wrote a paragraph. One paragraph, 40-page letter to my clients that I write every quarter, used to write every quarter. And I thought, this is an interesting special situation. You should maybe take 25 basis points or something and buy it. It looks to be uncorrelated to other assets. It looks like it's going to be something big. I got hate like you would not believe. I mean, people said, "You're an idiot. We're going to fire you. Go back and do your job. Don't talk about magic internet money." Now, the funny thing to me, is the next paragraph was about Saudi stocks, which I will argue is way more controversial than Bitcoin now. But no one gave me hate about Saudi stocks, but they gave me hate about Bitcoin. Now, to be fair, the price was $500. It went to $186 by September. And I was like, they were right. So I'm doing my work. 8 weeks later, it's $1,000. I'm like, no, there's something here. I did a little more work, and that's when I really kind of went down the rabbit hole. And I had this aha moment. I mean, I literally had an aha moment that this is an operating system. Blockchain technology is an operating system, the same way that mainframe computers ran on COBOL and Fortran, the same way that, mini computers ran on Spark, the way personal computers run on DOS and Windows, the way the internet runs on TCP/IP, the way these mobile phones that we all carry around are little supercomputers, they run on iOS and Android, that blockchains were the next platform or the next evolution of computing. And I became pretty convicted and finally convinced some clients in 16 to invest a little bit, Bitcoin, Ethereum. In 17, I met these two young guys, and they're like, "Hey, we should start a venture fund." Look, I'm an allocator. I'm a fund to funds guy. I hire other managers. I've given money to, amazing firms like Kleiner Perkins and Sequoia and Mayfield. And those are the venture capitalists. We're not venture capitalists. So, well, that's what we're going to do. And so we did. We launched a venture fund in late 2017, did the closing in first quarter 18. And look, we just got lucky. I said, my life series of happy accidents. I met this amazing visionary CIO at Fairfax County, actually two of them, Catherine Molnar and Andy Speller, and they got it immediately. Now, this was 2017, 18, when this was not kind of accepted, and they took a lot of personal career risk to recommend us to their board. And I'll tell us one funny story. So we're at the board meeting, and 2.5 hours, which is actually a good thing because that means they're asking the buy questions. You know, they're leaning in. But we get to the end, and this is a police pension fund.
As anticipated, the cost of Bitcoin from BC mining has experienced a significant surge since the recent halving event, leading to various challenges. In an industry already grappling with declining profit margins, as highlighted by Julio Moreno, the head of research at on-chain analytics firm Crypto, the amount of computational power needed to mine 1 Bitcoin per day has exceeded 1 exahash per second. This is a significant milestone in the history of mining, as it affects the profitability of miners due to the reduction in block rewards from 6.25 BTC to 3.125 BTC per block. In other words, miners now have to double their mining efforts to maintain their revenue. Investments to reach the break-even point. I carefully examined this using Glassnode data, just like a financial analyst. Since the halving event, the production of bitcoins has significantly decreased. Previously, an average of 900 bitcoins were produced per day, but now it has dropped to a range of 400 to 500. This decline in production is accompanied by a noticeable decrease in the hash rate, which represents the computational power required to generate new blocks and update the Bitcoin ledger. The price of EA rose significantly, reaching 721. This increase comes after earlier slashes in the week. However, Bitcoin's performance on the price charts has been unimpressive. Despite a brief bullish impulse, the value of the King coin slipped, with the crypto down 1.63% at press time, according to CoinMarketCap. In fact, the slump in the hash price, which serves as a barometer of Bitcoin mining profitability, fell by 72% over the week. While block rewards may no longer be a viable revenue stream for miners, there is still potential in transaction fees. As a financial analyst, I previously reported on the impact of the Runes protocol on fees. It resulted in a significant surge in fees, which helped offset the losses from the housing market. In fact, a substantial portion of the earnings from mining were derived from user fees. Let's get back to Mark Yusko interview.
And the chairman is a uniformed police officer, full uniform, helmet and gun on the table, Harley outside, like right out of central casting. And he says, Mark, I hear everything you say, but you want me to go tell my guys that I just put their retirement in drug dealer money? I'm like, no. Okay, I see your point, but no, I do not want you to tell them. What I want you to tell them that, look, you're a fiduciary and you have to earn 7.25% actuary assumed rate. And in a zero interest rate world, that's really hard. So you have to invest in innovation as an asset class, venture capital. And this is the next innovation of the tech computing cycle. And that's what you should tell them. Next day, Washington Post, pension fund invest in drug dealer money. Not making that up. And he was quoted, no, we're fiduciaries and we have an obligation to achieve our actuary assumed rate. We can't do that with traditional assets. We need to invest in innovation, blockchain technology, digital assets are a form of that. It's like, wow, that's awesome. And so that's a long answer to say, yeah, people thought you're an idiot. They said, why would you give up this nice career you've had and blow it with all these, drug dealers and terrorists? And now people are finally coming around to see, well, okay, maybe the largest, thing that funds terrorism and drug dealing is the US dollar, not crypto. And maybe, as Larry Fink just said on television, think about this. One of the most powerful people in the world, right? Runs the largest asset manager in the world, got on TV and said, yes, this is an asset that's here to stay. And you probably need to have some to protect your wealth against the devaluation of the currency. just let that hang in the air for a second. Right? I mean, that's a big deal. That is a really big deal. So we went from being ostracized, pariahs, Beanie Baby, tinfoil hat, conspiracy theorists, to, wow, yeah, this is a way to protect your wealth from the ravages of devaluation.
Renowned trader Peter Brand recently published an insightful analysis titled, "Does History Make a Case?" Bitcoin is at the top. In his latest essay, the experienced trader explores the idea of exponential decay, proposing that the bull market cycles of Bitcoin have gradually lost their momentum as time has passed. Brand highlights 4 major bull cycles in the history of Bitcoin, and the current surge marks the 5th. He also raises a concerning, each successive cycle has shown a decrease in momentum, with the current cycle projected to reach a potential peak of around $72,000. This figure has already been reached in recent trading. It is important to acknowledge the historical impact of significant events on the Bitcoin price. Brand highlights the stark truth of exponential decay, indicating a 25% possibility that BTC might have already reached its peak. In this scenario, Pete anticipates a market top and considers the possibility of price retracements, potentially leading to a decline to around $30,000 per BTC, or even revisiting the lows from 2021. Despite the bearish implications, he is speculating on these potential outcomes. He sees such a correction as potentially positive in the long term, drawing comparisons to similar chart patterns seen in the gold market. Brand concludes his analysis by reluctantly acknowledging the undeniable significance of the data. Despite his initial skepticism, he is compelled to accept the conclusions drawn from the compelling evidence. If you learned something from this video, then please like this video and subscribe our channel Everyday Finance, and we will meet in next video. Thanks.